Malaysia Airports Holdings, the parent company of Malaysia Airports Sepang and Capital A, formerly known as AirAsia Group, say they have decided to cease all legal proceedings against each other. In a joint statement, the two groups said they are pleased with the decision and stated their desire to work together to build a stronger platform for the domestic tourism and travel industry. MAHB Managing Director Dato' Iskandar Mizal Mahmud said the airport's operator believes that close collaboration with all stakeholders within the aviation ecosystem is key in propelling growth for both the industry and the country. He said MAHB is committed towards working together for the mutual benefit and success of all the aviation stakeholders, the airlines, airports, passengers and the industry. Meanwhile, Capital A CEO Tan Sri Tony Fernandez said this amicable outcome bodes well to support the speedy recovery of the industry and to stimulate Malaysia's tourism and economic growth. He added that as two major players driving the aviation ecosystem, it is more important than ever that MAHB and carriers AirAsia and AirAsia X show solidarity in making Malaysia's aviation industry competitive and attractive again. At the close, MAHB's shares declined 0.48% to RM6.28, valuing the group at RM10.42 billion, while Capital A's shares fell 1.55% to 63.5 cents for a value of RM2.64 billion. Prime Minister Datuk Sri Ismail Sabri Yaakob says the Cabinet has proposed to declassify the 2019 forensic audit report on the littoral combat ship project once it gets the advice of the Attorney General and the Auditor General. In a statement today, he said the Cabinet has also asked the Malaysian Anti-Corruption Commission or MACC to speed up its investigation into the project, which was awarded to Bousted Naval Shipyard in 2011. If there is strong evidence, he said the Attorney General should prosecute and those responsible will be brought to justice. Meanwhile, a report on the project by the Special Committee on Governance Investigation, Government Procurement and Finance, chaired by former Auditor General Tan Sri Amrin Buang, will be made available to the public. Putrajaya will, however, still be proceeding with the project. The government has paid some RM6.1 billion for 6 vessels, 5 of which were supposed to have been handed over this month. Not a single ship has been completed. Separately, the Armed Forces Fund Board (LTAT), the main shareholder of Bousted Holdings, said the sum paid by the government to build the ships was used to buy equipment on a bulk order basis. LTAT CEO Dato' Ahmad Nazim Abdul Rahman explained these bulk order purchases were made to ensure cost savings in building the vessels, which had to be done concurrently. He added that the estimated cost of building one ship was RM1.5 billion, which was lower than the RM1.9 billion to RM2.4 billion spent by other nations for such vessels. Former workers at rubber glove maker EX-BRIGHTWAY Holdings have reportedly filed a lawsuit in the US against Kimberly-Clark Corp and ANSELL, accusing them of knowingly profiting from the alleged use of forced labor at the supplier. Citing a complaint filed in the US, Reuters reports the workers, all Bangladeshi citizens, say the companies were aware of the alleged abuses through public reports on EX-BRIGHTWAY and other Malaysian glove makers and violations found by labor audits. In the lawsuit, the 13 former EX-BRIGHTWAY workers say they paid high recruitment fees to middlemen that resulted in debt bondage, worked long hours with few or no rest days, and had their passports taken by the company. They are seeking damages from Kimberly-Clark and ANSELL in the Federal District Court for the District of Columbia. Citing their counsel, Terence Collingsworth, the report said he had first proposed mediation with the companies to obtain compensation for the workers, but both declined. Last December, the US banned EX-BRIGHTWAY products from entering the country over suspected forced labor practices. A year prior, the Malaysian Labor Department raided the premises of the company's subsidiary and reportedly found workers living in squalid conditions in shipping containers. Reuters reported in May 2021 that labor audits of EX-BRIGHTWAY had detailed 61 violations of global ethical standards and 50 violations of Malaysian labor laws, even though the auditors concluded that they did not find forced labor. Analysts have maintained their sell calls on HARTALEGA Holdings and cut their target prices for the glove maker after its first quarter FY23 earnings missed expectations. Hong Leong Investment Bank Research slashed its target price to RM1.92 from RM2.37 previously, on the back of lower utilization rates of plants and average selling prices, which it expects to hover at around $20 or about RM89.14 per thousand gloves in the near term. It also cautioned that HARTALEGA could be at risk of removal from the FBM KLCI in the upcoming semi-annual review, should the glove maker's share price deteriorate further. Meanwhile, MIDF Research trimmed its target price for the counter to RM2.58 from RM3.09 previously, as it believes pricing and margin compression will continue in FY23 due to weaker demand from customers because of overstocking and subsequent inventory modification, as well as intense competition in the global glove industry. It said HARTALEGA's solid balance sheet could provide a cushion against market volatility. A check on Bloomberg revealed 10 sell, 9 hold and 2 buy recommendations on HARTALEGA, with target prices ranging from RM1.92 to RM5.80. HARTALEGA's first quarter FY23 earnings fell 96% to RM88.28 million, while quarterly revenue slumped 78% to RM845.67 million. Its shares settled 12.5% lower at RM2.45 today, giving the company a market capitalization of RM8.4 billion. Petronas subsidiary MISC says it has, via a consortium with Nippon Yusen Kabushiki Kaisha, Kawasaki Kisen Kaisha and China LNG Shipping Holdings, been awarded LNG shipping charter contracts by Qatar Energy. Qatar Energy is Qatar's state-owned energy company and is involved in exploration, production, refining, transport and storage. MISC said in a Bursa Malaysia filing earlier today that the contracts involve 7 new LNG carriers, which will be built by Hyundai Heavy Industries Co. and employed by Qatar Energy under long-term charters starting from 2025 onwards. It did not specify the value and duration of the charter contracts, which will involve tank ships with a capacity of 174,000 cubic meters each. MISC said it has agreed on the principal terms for the consortium, and each consortium member will have an equal equity interest of 25% in each awarded LNG carrier. The shipping company will ink shareholders' agreements through its subsidiary Porto Venere and Lerici Labuan. At the close, MISC's share price rose 0.99% to RM7.13, which values the company at about RM31.8 billion.